Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So on the daily chart you could see that situation mostly stands the same, and at first glance there's nothing is going on here. But today, if you let me, I would like to involve in our discussion high time frames on the weekly, on the monthly chart, just because it might be crucial for trading on the gold in nearest time. So today we have taken a look at the fundamental background on the gold market, but mostly stands the same as for other markets across the board. So yesterday we already take a detailed view on these factors, which is the overall situation in the United States economy becoming worse, and that is supportive for the gold because it promises us that inflation will remain under pressure for a longer term. This overall situation with the consumption, house market, job market is becoming worse. It promised that probably fourth quarter gross domestic product will be not as positive as market expected, and in the first quarter result in the 2021 we also could get even negative numbers. So that is supportive factor for the gold, but it stands at a bit more extended time. It stands over the horizon, so on the next year. But what to do in the nearest week? And in the nearest week, all eyes will be on the stimulus pack and stands discussion around. But this question is very tricky currently. Why? Because it's already approved by the Congress. It's $900 billion already has been passed through the Congress. And the problem that Donald Trump hasn't signed it. It means that mostly this aid pack is already priced in. It's 90%. Because nobody expected that Donald Trump will not sign it, and the upward action that has followed when it was released out from the Congress, it was positive. What does it mean? It means that even if Donald Trump will sign it in the coming week, it will not become a super positive effect on the market. I will not be surprised if even we will see the opposite action. When we will get the sign of the Donald Trump with this pack, market even could start dropping by the profit taking in preparing to the holidays, the New Year. The only thing that could push gold significantly higher is if Donald Trump will set the stimulus pack of the higher value, greater aid to be provided to the people. But the problem here is that it has to push it through the Congress and Senate approval. And it's too few times, 4 days till the holidays, and hardly they will be on time to pass it. So, as you can see, situation stands, on a dead way. So, it's difficult. And on the gold market, currently we see the same signs that we have discussed on euro currency. In general, overall mood and the medium-term trend stands positive. It's on the euro currency, but in the shorter term, within the 3, 4, or 5 weeks maybe, gold could feel some pressure technically and could show some downward action. Besides, if we'll take a look at the higher time frames, you could see how tricky situation stands even from the technical point of view. First of all, take a look on the monthly. Last week we already mentioned this. Market stands almost at the break-even point of the possible grabber here. So you can see it's actually 1890 at the break-even point for a bullish grabber. Appearing of the grabber suggests action above the previous top. It's very important. The failure of the grabber tells nothing, but it denies the idea of the possible background for upward action. It also could become important. Additionally, on the weekly chart, market stands at the point that actually some kind of the decisive moment. Previously, market accurately keeps and holds these harmonic swings. Here, And right now it stands precisely at the point of the same harmonic swing. So from this point of view, market has to either double the harmonic swing and start the upward action, which correspondingly mean that we will get the grabber. That in turn consequently means that we will get upward action above the top. So consider the chain of the events could happen depending just from the one level. What will happen around current local top, around 1890 level. Failure to do this suggests downward continuation, and I'm not excluding the chance that we could get another swing down. So market could complete the major OP target here on a weekly chart around 1730 agreement. So that's why this current moment, as I said, very important, and only on the first glance it's nothing interesting stand on the gold market. In reality, if you'll take a look at the importance of this level, you could see that a lot of stands on the table currently, and significant price action depends just from the one thing: what will happen on the common week within rest 4 sessions around 1890 level. On the daily chart, we already mentioned that overall price action currently stands very choppy, especially on intraday charts. On the daily, you can see we have high wave pattern, and everybody depends on the breakout of this range. So as you can see, the last session was inside high wave and makes no impact on the technical side, technical situation. Downside breakout means at least doubling of the high wave to the downside, but I think that this could become just the starting point, because strong downward action could happen if the market will break this pattern to the downside. Breaking above this level means that this could be further upward action, at least for the same distance, but just in the beginning. What will happen after that, since we could get grabber on the monthly chart, that could be really promising breakout. So the breakout of the high wave will be just the beginning, but it very important moment. On the intraday chart, current situation, guys, stands mostly in favor of the downside action, because this type action it absolutely looks different compared to what we have to get if market stands in a reversal and an upward continuation. It's too choppy and heavy price action here. The same actually we have on the euro currency. Yes, we've also discussed some bearish signs, bearish hints that we have on the daily and intraday charts. And this type of action is difficult to call as the reversal moment. As we said on Thursday, here is a crucial level that occasionally coincides with the culmination, with the break-even point for a monthly grabber. And that's also a decisive moment for a short-term situation as well. So while market stands below this level, below 1888, we should treat it as a retracement, and we should treat the overall tendency as a bearish, because 618 pullback is a normal pullback after the significant drop, and it could be treated as a retracement. And bearish context in this case will stand intact, not only because of the intraday chart, but because of the weekly chart with the harmonic swings, and because of the monthly chart, of the lack of the appearing of the grabber. Additionally, I would like to show you the dollar index, and you can see that on the dollar index daily chart we have pretty nice butterfly pie with the starting minor upward reaction here on the dollar index, which stands too small for the butterfly. For a butterfly, usually a 30% pullback that should be somewhere around this area. So it might be some dollar strength by some factors. We do not know what the factors could be, but appearing the bullish reversal pattern on the dollar index tells that at least minor reaction here could happen, and then it could be a bit stronger and longer than currently stand, which makes pressure on all dollar rivals, the coal market, and the forex, and the euro currency, and so on. So combining with these factors all together makes chances on the downward action a bit better than for immediate upward recovery, upward continuation, which means that on the common week we intend to keep an eye on the same level, 1888, 1890 area. That will be decisive. So if you would like to go long, it would be better to wait when the market will break this level up, and then, well, maybe watch for patterns, maybe watch for some pullback or retracement, try and take the long position, but do not take the position until market stands below this level. If you would like to go short, you could consider this area as an area where you should hide the stop. So your stop should be somewhere above 1890, because this area will be an area of the failure of the bearish context. And if market will move there, it will definitely tell you that the bearish context has failed, and it means that your position will be wrong. Well, that's actually what we have in the gold market. Let's keep an eye on what will happen in the next week, because it should provide a lot of important technical solutions on the gold. This coming week will answer the question of what we will get in the nearest few weeks, whether it will be upward continuation rally or we could get the deeper downside action on the gold as well.